Good morning. This is our footprint today. Fortuna operates in 2 continents, 5 countries. Last year, we closed the acquisition of Roxgold, expanding our business from Latin America into West Africa. These are our quarter results for Q1. We are exhibiting for 3 quarters now the strength of our business. We have a consolidated gold equivalent production of about 103,000 ounces of gold for the period. So we're tracking for roughly 420,000 ounces of gold equivalents for the year, in line with our guidance. And this low-cost production, so 67,000 ounces of gold in the period, 1.7 million ounces of silver, and byproduct lead and zinc. Sales for the quarter, $180 million in sales. That's a significant growth over a year ago, driven mainly by the better performance that we're exhibiting at our Lindero mine in Argentina and the contribution of our Yaramoco mine in West Africa. Adjusted EBITDA, a robust $80 million for the period. We're running the business with EBITDA margins of around 45%. Adjusted net income was a record $33 million for the period. Without adjustments, it came in at around $27 million or 9 cents per share. And looking at adjusted net income, we beat the market consensus for earnings, for income for the period. We're building our 5th mine in Ivory Coast, in Côte d'Ivoire, the Seguela mine. Seguela will be a cornerstone asset in our portfolio. No, it will be a flagship asset. And it was one of the drivers for our acquisition in West Africa. Seguela has not only robust economics today, looking at a feasibility study, modest capital to bring it into production. The capex for the construction is $173 million. As of today, we're about 52% complete with construction, tracking well to deliver first gold in October of 2023. Sorry, in May of 2023. But one of the key drivers for us here was, again, not just the robust economics of the project, but also the exploration potential. Before I speak about the exploration potential, just some updated photos of our construction. We're basically complete with earthworks. We are starting to place concrete on the foundations and of the processing plant. We're starting to place a liner on our tailings facility. Excavations are 80% complete, concrete work starting. We have 85% of equipment packages on the water. So construction is advancing really, really well. With respect to exploration potential, this will be an open pit mine operating a series of pits, feeding a centralized 3,700 ton per day mill. And we continue discovering more gold. No, we have currently 4 or 5 deposits, and this that I'm showing here on the section is a new one called Sunbird, located only 2 kilometers away from where we're building the processing facility. Sunbird is not incorporated into our resources and reserve inventory as of yet, and on our feasibility as of yet. So it brings additional 350,000 ounces to the economics of the project, right? And something that excites me in particular is that within these ore bodies that we are coming up with, we find extremely high-grade zones that provide to be strong sweeteners for the production mix, right? For example, here we have a core zone with intercepts of 8.5 meters with 11 grams, 14 meters with 7.5, 18 meters with 20 grams, and so on. No? So this mineralization at Sunbird remains open, and we continue to pursue that with exploration. Moving on to our Yaramoco mine in Burkina Faso. Yaramoco is a mine that's been producing gold since 2016. Currently operates at about head grades of 6.5 to 7 grams gold. It has reserves in the underground for around 3 years, and in an open pit pillar recovery an additional 3 years, so a total of 6 years for gold production. We still have exploration potential we're pursuing at this mine. This is our highest cost operation today, with our guidance for the year is between $1,300 and $1,600 all-in sustaining cost per ounce. And we're tracking, again, along with our guidance projections for all-in sustaining cost and ounces. This mine will deliver around 120,000 ounces this year. This section shows just the architecture of the mine and the distribution of reserves and resources. As you see in the pink color at the bottom, that's where we're going to be mining over the next 3 years, and where we are continue pursuing extensions of the ore deposit. Our Lindero mine in Argentina, moving over to Latin America. It's our newer operation on the LATAM side. 2021 was its first year of production, and we have delivered now 2 consecutive quarters with gold production above 30,000 ounces. Our gold production in Q4 was actually 36,000 ounces of gold. Q1 has been around 30,000 ounces of gold. All-in sustaining cost for Q1 came in at under $1,100 per ounce. So the mine is tracking along with our expectations. Ramp up of this mine was a tortuous, challenging process for the team as we were ramping up through the worst of the COVID pandemic in a country that basically locked itself, right? So it has been challenging. Those challenges are behind us, and we're looking forward to a strong 2022. And again, we're already starting to see the good performance coming in, starting towards the end of last year into this year, with the production and costs tracking around $1,000 per ounce, right? Or San Jose mine in Mexico. This mine has been in production since 2011. It's a project we basically acquired at the early stages of exploration, and we have developed it through resource development, engineering, construction, and multiple expansions, until what became ranked among the 14 largest primary silver producers in the world. This mine is a significant silver producer. Based on reserves we have and resources, we currently see a life of mine of around 4 years, and we continue aggressively pursuing exploration at this deposit. We're currently delivering silver here with an all-in sustaining cost in the range of $14 per ounce. Or Cayoma mine in Peru. This mine has a tremendous history. You can. It tells the history of Peru. This mine has been in operation for 500 years, on and off. We acquired it. It was our first asset. We acquired it back in 2005. Steady. It's our smaller mine in the portfolio today, but delivers free cash every year. Steady operator. We are currently operating with all-in sustaining costs on a silver per ounce of silver at around $17, $16, $17 per ounce, right? We currently have reserves for 6 years, but if we consider additional resources, we can clearly see today in our inventories close to 10 years of mine operations at this asset. I've never seen this mine with that kind of life projection. In inventories, again, this mine has been operating for years. So that's it. I don't know if there are any questions before. Go ahead, George.
What about sort of growth and exploration? Are you sort of ramping it up in Africa?
Yes. We have this year a $30 million exploration budget. This year we're managing our largest capital budget, $244 million. A big chunk of that is the Seguela construction, about $75 million in sustaining capital at our mines, plus $30 million in exploration. Of the $30 million in exploration, we have three priorities there that capture the bulk of those $30 million. One is the high-value opportunities that we have at Seguela. So Seguela has a close to $9 million budget allocated for exploration. So even though we're building, usually you see mines building and taking a pause on exploration. Here we're building and we're accelerating exploration because we continue to see extremely good results every time we're drilling. And Sunbird speaks for that, right? And the other priorities are brownfields explorations at our Yaramoco mine and San Jose mine, which are the operations that are running thinner on reserves right now, right? So we're pursuing high-value opportunities in Seguela for additional resources and reserve replacement at those two other mines. No, so those are our exploration priorities. We're not doing much outside of the portfolio. We just believe there is a lot to harvest within the portfolio, particularly the West African portfolio, right? So we're focusing right now on delivering growth with the Seguela commissioning next year and capturing those immediate exploration opportunities. The cheapest ounces we can deliver for our shareholders are the ounces we already own in the ground we control, right? So.
George.
We initiated a share buyback program. That's a way to return it. So we're working on that.
Okay, thank you very much, George.